Today is Thursday, May 28th, 2026. We've got PCE inflation for the month of April coming through, Q1 GDP revision as well today. We also have some updates on AI, some things that really moved. And then the banks were talking yesterday at the Bernstein conference in New York on the financials track. So interesting to see what the likes of Jamie Dimon and Brian Moynihan are seeing. And then later today, Tom, we have your golden boy, Scotty B, who is taking the mic in the press briefing room. He will be leading the press briefing in the absence of the spokeswoman, Caroline Levitt. She's still on maternity leave. So Scott Bessent will be running the press conference today. That'll be very interesting indeed. But first, if we have any of the data on PCE inflation, let's start off with that.
Yeah, so the data is out. And to kind of give context to where we were ahead of the data coming out, we were seeing a little bit of a walk back on bonds. We had gone back over a 450 on the 10-year. But now the data is out, and it's actually a little bit cooler than expected. So the month-over-month change was expected to be 0.5%. It came in at 0.4. The year-over-year PCE headline was expected to be 3.8. It came in at 3.8. So my guess would be that's rounding up from 3.7 something, given that the month-over-month was low. Core PCE month-over-month expectation was an increase of 0.3. We came in at 0.2. And then the headline year-over-year was expected to be 3.3, and we came in at 3.3 on the screws there. So pretty interesting in terms of, I think everyone was really anticipating a hot number here. I mean, I wouldn't have been surprised if we'd seen a 4. I mean, I know we know the components going in, but it's really not there. We also got, the personal income, personal spending for April. So personal income came in flat. The expectation was an increase of 0.4. Personal spending came in at an increase of 0.5. That was right in line with the expectation. And then also the most beautiful data of all, initial jobless claims. We came in at 215,000 jobs on an expectation of 211,000. And last month was revised up from 209 to 210. So, that data always seems to be exactly in line with expectations now. So no major news there, but we are seeing what was the beginning of a sell-off in bonds kind of walk back, so we're down slightly on bonds today, but otherwise still considerably net up for the week.
Where did you have personal income and personal spending?
Personal income was 0.0. Personal spending was up 0.5% month over month.
I think the inflation number that you mentioned was interesting, especially on the core side, 0.2%, you said, on the core. So, again, that's kind of in line with 2% inflation. And this happens with fuel prices going up. Again, we're on 3.3 on a year-over-year basis. But we thought that we'll have a couple higher inflation prints. So this is just the first one. There'll be a higher one in May, and there'll be another higher one maybe in June. And that's kind of as expected. That the thing that I keep coming back to is even with these fuel prices going up 40, 50, 60% in the space of a month and a half, we're seeing inflation that is still well below 4%, especially on a core level, and really kind of on an underlying level below 3%, especially when you take out the what I would say fraudulent housing prices. So I think that's all good news from the inflation front, and I don't think it's a reason to be freaking out. I've heard a lot of people talking about stagflation. I do think that the longer that interest rates remain elevated and the longer fuel prices remain high, I do think that could cause a deceleration in some of the spending that we've seen, but on the growth front. But I'm not as concerned about inflation spiraling out of control as most people are. As I think many people on the call know, that is not my biggest concern right now.
So young TK, who's actually producing the call, so junior producer Thomas Klecker put an interesting chart in the investment team chat yesterday that we're now officially in the worst 4-quarter change in home prices since the global financial crisis. And yet the elevated levels of CPI on the housing front continue to be completely misstated. And you're starting to see more chatter on that. Harley Bassman, he goes by the convexity maven. He's a bond guy and sort of a weird shadowy figure in the bond world. He put out a white paper last week that basically said that he thought that we aren't going to see inflation come down. He thought inflation was going to stay high, and then that was a problem for mortgage bonds. And he specifically said, and I don't want to hear about the people who are whining that owner's equivalent rent is running behind and is too high and overstating inflation. But then you see data that shows that, I mean, Home Depot's talked about it. We're now seeing the Federal Home Administration talk about it, but home prices are starting to crater in a massive way. And so all that feeds into core PCE. So if you're running, call it, I don't know, almost 5% too high in terms of your stated inflation rate on housing, what does that actually put us at, even with the increase in oil prices, real inflation? I mean, I think we're actually much closer to 2, if not sub 2. And that's going to necessitate rate cuts. And it's going to necessitate a reorganization of the yield curve because, I mean, one, inflation is overstated. I believe that in my core. And the jobs market, I think, is equally, if not more, overstated. I mean, just anecdotally on the earnings reports we've seen all through this week. And I mean, looked on LinkedIn, everybody's open to work, after 8 years at Salesforce, I'm given the golden opportunity of finding a new path, and all the weird flowery language that people put on there, because LinkedIn is the most BS place on the internet where people just put absolute garbage. They're like, man, I bought a dog this weekend, and here's what it taught me about B2B sales, that kind of stuff. I mean, things are getting rough out there. We're way too restrictive. The bond market selling off so much has made it even more restrictive naturally without the Fed doing anything. Yeah, we got to get these rates down. I mean, I just don't see any ifs, ands, or buts about it. But if we can get, this memorandum of understanding pushed through with Iran, cool that down. I mean, oil is still, it's elevated from where it was yesterday. It's still relatively low range for the last month or so. I mean, I think we could really cruise into a real surprise and lower inflation towards the second half of the year. How soon that happens and how soon the Fed recognizes that is really going to depend on how well Kevin Warsh can convey that information, but he's got to know. I mean, if I know, he's got to know, right? I mean, these are more educated people than myself.
Yeah, it's going to be very interesting to see what happens with that. I'm also very curious to see what happens with they redid the business birth death calculation in January. So, what was the driving factor of writing off 1 million jobs a year for the last two years? They've changed that so it's a little bit more of a real time. So I did a deep dive into this yesterday to try to figure out what was driving that birth death ratio and why it was so off. Well, in COVID, do you think there were more businesses created when they could capitalize on PPP loans or fewer businesses created?
Well, I do know that yesterday they announced that they're clawing back $20 billion of fraudulent PPP loans that they tried to cover up on the way out the door of the Biden administration, and that people are getting arrested all over the place. Indeed.
So we saw business formation absolutely skyrocket during COVID. And so the way they calculate that is on a 5-year ARIMA model, which looks at momentum and kind of the trend and what's noise. Basically what it was doing is it was forecasting that business birth formation was going to continue, and they were embedding that in every monthly number. And then at the end of the year, they realized that, oh, wait, we haven't created this many new businesses this year. Therefore, we haven't created this many jobs. Therefore, we need to write off 1 million jobs. I do think that that's starting to phase out anyway. And then also they changed the calculation to make it more real time back in January. So you have those factors going on with the jobs numbers. And I do wonder if there are a lot more businesses being spun up. And I actually have some data on this that is beyond the scope of the call today, but maybe we'll get into tomorrow or next week, where business formation is actually starting to accelerate again. The question is the employment numbers going to take that into consideration? I think that we could end up in a situation where we have fewer jobs reported. So we almost have the reverse of what has been happening in the last couple of years. and we actually end up having more businesses created. Professional services businesses that have been created are absolutely skyrocketing because everyone who's getting laid off, not everyone, but smart people who are getting laid off are immediately opening LLCs and just running businesses via Claude or ChatGPT or any of these other AI programs.
I mean, we talked about it in real time on this podcast when it was happening, when the first round of fraud investigations on the PPP were happening, where they found, I think it was 25 farms were listed in a Chicago high-rise, and they took millions of dollars in PPP loans. So, surprise, surprise, you forget that the most unbelievable job creation storm of the 21st century happened after Trump was out of office, and suddenly we regained all of the jobs we lost during COVID and then some in a very short period of time. And now they're having to walk back and claw back that money to fake businesses that were paid out SBA loans, and there are people being arrested all over the place. It's almost like those jobs were never created, and we don't go back and talk about it. And also, the unemployment rate never changes. It's like we've wiped out millions and millions of fake jobs off the rosters, and yet somehow we just sit quietly at 4.3 or whatever, and it never moves. It makes no sense to me. I mean, you can't, 2 divided by 3 is not the same as 1 divided by 3, and yet somehow we continue to chop away at the denominator or the numerator, and yet the percentage comes out the same. So, color me jaded, but I just think the jobs picture is much worse. I think we're actually closer to 6% unemployment, and I'll stand on that.
Do you remember, this is a last sidetrack, and then we can get going with some of the company news, including Meta here, but when did we move away from the created or saved metric in jobs? Do you remember for about, let's call it 8 years, we had jobs that were either created or saved?
Yeah, that was the Obama administration.
That was the metric.
Yeah,
and I no
that
one
was like
ever
the
defined
TARP
how
thing.
they saved
right. That
jobs.
was the TARP thing where they're like, oh, well, we
created or saved.
Yeah, we spent. Well, the crazy thing is the numbers at that time were so small. They're like, because what was TARP? $800 million or something? $900 million? It wasn't $1 billion.
Yeah.
I mean, on a relative scale, we've just gotten off the rails in terms of what the government just prints and gives out to people. And that was, you could argue, at least at that time, they were fighting disinflation or negative inflation, and that would actually be a positive effect of printing money is to bring it back up to zero. But I mean, it's crazy where we've come in the last 20 years on terms of like just massive numbers on bailouts, going from less than $1 billion to over $2 trillion.
It's unbelievable. Yeah, let's talk about liquidity. Jamie Dimon was basically saying that the markets are benefiting from high liquidity right now, but then he lumped all of the following into high liquidity. He said deregulation is a form of liquidity. I can kind of see that. The one big beautiful bill is a form of liquidity. Tax refunds, which he put separately from the one big beautiful bill, is a form of liquidity. And AI is a form of liquidity because it increases productivity. So he says that's a big tailwind. So basically you have a lot of big tailwinds, and then you have some risks out there. And so he's cautious, as he always is. And so there's no change there. But when you look at Bank of America, who just kind of calls things as they are, I mean, Jamie Dimon's a risk manager. He always thinks about risk. He's the Howard Marks of banking. Brian Moynihan is just, here's what's going on. And he says that consumers are good, commercials are good, and all of them say that trading is going, investment banking is going nuts. Even Jamie Dimon said, I mean, it's gung-ho, folks. People are doing M&A. It's like the best we've ever had. I've forgotten how many years equity capital markets is going to be huge this year. Sponsors are busy. So private equity coming back in. Companies are busy. There's a lot of exuberance out there. Bank of America was talking about, how are all these deals going through in the space of these uncertainties with Iran and interest rates. And one hand says people are just plowing through. There's catalytic change going on with the impacts of technology. So you're seeing our clients, the ability to do deals in the market. The pipelines are full and the activity's high. So things are happening. This is why Goldman Sachs is trading at almost $1,000 a share now. And I think this will continue until it runs into a brick wall. And I'm not seeing that brick wall yet. It'll be interesting to see how this SpaceX IPO goes, because then we have a few more IPOs coming later in this year. But it's going to create a lot of wealth. There's going to be a lot of millionaires overnight who are going to be buying nice cars, probably not the new Ferrari EV, but that's a stimulus.
Man, that Ferrari EV is yuck, dude. It's really bad. I did ask Gemini here, is gung-ho racist? And the answer is no. It's not inherently racist, but it is complex and sometimes controversial in use, and that you should consider it in discussions of inclusive language and cultural appropriation. But it comes from the Chinese phrase gong hei, meaning work together or industrially cooperative, which is that's a lot of content in 2 syllables, industrially cooperative. So there you go.
On the company news, in AI, Meta was up almost 4% yesterday. They're rolling out subscriptions, so they're going to have Facebook Plus, Instagram Plus, each priced at about $3.99 at $3.99 a month. WhatsApp Plus will be $2.99 a month, and they will have a Meta AI chatbot similar to ChatGPT or some of these other GPT services, priced at $7.99 a month for basic and $19.99 a month for premium. So no longer just an advertising company, but if you want to be an influencer, you're going to have to buy one of these plus accounts. And I think that there's going to be a lot of people who do that, and people are excited about Meta. But importantly, this is a way that Zuckerberg's thinking he's going to get paid with all this AI investment. He's definitely thinking about, how do I get paid? And I don't think he never was thinking about that, but the market has just swings wildly on the guy from quarter to quarter. And I think that history's proven that he's going to figure out how to make a buck. And I think that he's going to do it with this as well.
Yeah, I think the freemium model is done on a lot of things. But if you participate in the content creator payout on X, formerly Twitter, do you have to pay for the check mark? Do you think that that's you have to pay the $8.99 a month in order to benefit from your content? Like, is that
I believe so.
A Rochambeau situation?
I think so.
Interesting. Yeah, I've never thought about it because I'm not an influencer. Though I guess we do have a YouTube channel. Welcome to the show, guys. Let's get to 1,000 subscribers so we can start monetizing this pig.
In other news, Salesforce down 1%. Not great numbers. They're growing about 7 to 8% organic growth, but they've been hit so badly. They're only down 1% pre-market. Hewlett Packard down 2%, although they kind of raised guidance. They were thinking it would be closer to 290. Now they think 290 to 310 in earnings per share. Just not seeing a whole lot of positivity in terms of moving PCs. And we heard that from Microsoft as well. Although Best Buy did report earnings, and they're making better margins and seeing some better growth on the discretionary side. So Best Buy actually doing fairly well this morning. But the big one today is Snowflake. That's up 35%, and Dollar Tree up 12%. Snowflake revenue accelerated in the quarter, and basically, so what they have is a data lake. So they have a bunch of unstructured data that people just dump into the lake. And now they have agents that kind of go in and sift through that, and people are willing to pay for that. So Snowflake is benefiting from AI, and they were also hit along with all these other software companies like Salesforce and like many of the ones that we've spoken about. But now people are thinking they'll actually be a beneficiary, so we're reversing all of those losses this year. I think they're still down on a year-to-date basis, even going up 35% this morning. But that's good news there. One thing I thought that you might be interested in, Tom, is that you keep looking for these European innovative companies. I found one for you.
Ooh.
It's called Mistral.
Bad name. Go.
They are a European AI. They have like Mistral Chat or something.
Sounds like an area of Reddit where people with unusual pronouns interact.
They use NVIDIA chips. They're now thinking about designing their own chips. One of the more innovative companies in Europe. So they compete with ChatGPT. They compete with Anthropic, and they're pushing a really, really strong valuation of 12 billion euros.
No way.
About 1% of Anthropic. Oh no, actually less than that. About 0.5%.
So this is something we talked about briefly in the office yesterday, and I think it's worth exploring is, so we're basically on the cusp of 3 different companies of roughly $1 trillion valuation, all IPOing sometime in the next 6 months, call it. So you've got SpaceX, you've got...
I think they may all be closer to 2.
So you've got Anthropic and you've got OpenAI. Where does that capital come from? Because there's going to be a ton of money chasing it. Recently, I've seen a lot of Twitter chatter suggesting that Bitcoin is dead and that all that money is flowing out of Bitcoin and into the Microns and the SK Hynix of the world, that's the new flashy trade. All the Robinhood investors are done with crypto. They want to get into chips and memory, and they want to be on this AI trade. Where do you think that money comes from? And there's concern that Tesla is going to be hurt quite a bit by SpaceX going public. I mean, do you think NVIDIA could get hurt by OpenAI and Anthropic? Or even the memory chips just flow straight to the top of the food chain. I mean, that's a ton of capital that has to be
spoken for.
But yeah, I mean, and eventually those are all going to end up in the S&P, though you did make the point yesterday, they need to be profitable in order to be included, but eventually they probably will be.
Yeah, I think you could. So here's how an IPO works, because I don't know if, I think people kind of get it, but might not know the intricacies. So when a company comes public, generally they will offer new shares to the public. They'll raise capital. Sometimes it's only existing shareholders that sell into the IPO, but in a good IPO, you're IPOing for a reason. It's not just to give payout to the guys who work there, guys and girls who work there, but it's also to actually raise capital for the business. And so SpaceX, for example, is looking to raise $80 billion. That's a lot of it's going to be new shares that they're going to be able to use this money to reinvest into the business. This is why you go public, so you have access to those capital markets. The valuation of the entire company is going to be about $2 trillion. And so what happens to the $2 trillion that's owned by people like Elon Musk or all these SPVs or people who work there? Well, over a certain period of time, they're going to be allowed to go ahead and sell their shares. And that's subject to various lockup provisions based on the share that they have. And so what you'll see is it'll start off with $80 billion, and the market can absorb that. And the fundraising for that is going on right now. That's a massive deal, by the way, and it's going to make Goldman Sachs a lot of money, who's the lead left underwriter on the deal. But then over the course of really the next 6 to 9 months, you'll see this steady stream of shares that all of these people who work at SpaceX, they're going to want to cash out, take their millions, and buy a new house or buy a boat or buy a plane or buy a new car. That's what they're going to do, or just diversify.
NBA team in some cases.
Yeah. So that's what we'll see over the next period, and I think that's going to result in ongoing selling pressure in a lot of these stocks. That's going to be difficult to absorb because you're going to have to get new people to buy into this. I think that it makes it tough. The liquidity makes it tough. I think it's going to be a successful IPO, but you're going to have a lot of people who just want to sell, and that money's going to be coming out of the system.
Gun to your head, do you think that SpaceX closes over $3 trillion in the year 2026? Within the first week, maybe?
I think if it happens in the first week.
Yeah. That's going to be interesting. I mean, we haven't had big IPOs in a long time. In fact, the IPO cadence has been virtually zero for a long time, which goes to your point of the business creation has been mostly fake. But just to close out the call, we did get a Core PCE apology from Nick Timmerhouse 10 seconds ago on Twitter. Core PCE prices rose 0.24% for April. While that is the mildest month price over price gain in the index in 5 months, it still annualizes to 2.9%. So we got a little bit of tears here from Nick Timmerhouse. He's trying to backstop the idea that inflation is running out of control because he hates that his daddy is leaving the Fed. But it should be noted that number was extremely mild, and that does include the massive overstatement in housing. So something to think about as we move toward the second half of the year. I'm still one, maybe two cuts. I think that we're going to see inflation just evaporate as soon as this Iran war is over. So
I'm certainly more in your camp. In fact, I would even take the over on that. We do have one last piece of news. This, I promise, this is the last one. But would any of you be interested in a $250 bill commemorating USA 250?
Ooh.
But it has Donald Trump as the feature.
I have said this, and this is an interesting way to fight inflation. And this is another tangent, long call today. But you could help reduce the M2 money supply by doing something like this, where you sell someone a $250 bill for $250, but you have to pay in cash. And when you pay in cash, you retire those dollars. So like if you could get 1 million people to do that, you could retire a big chunk of the M2 money supply, effectively curtailing inflation. And what you receive is, in theory, an asset, a collectible. And what we receive is a reduction in the M2 money supply.
I mean,
like, why is that not a thing?
I would definitely buy a $250 bill as a collectible, for sure.
Yeah, why not? I mean, when $2 bills came out in the mid-'90s, they were hot. And then you had also the quarters, which people forget. The state quarters were a big deal.
And I own my book and everything.
Yeah.
All right. The long call today. We'll be back with you tomorrow. Have a great day.
Enjoy
Bye
your
for now.
burritos.